medium-term budget policy statement, the mid-year update that outlines how government plans to manage spending, borrowing and growth over the next 3 years. The MTBPS comes, or that's the medium-term budget policy statement, comes against a difficult backdrop of weak economic growth, high debt, revenue shortfalls and mounting pressure on social spending. To help us unpack what this all means, we're joined by Economist and Director at Econometrix Dr Azzar Jammine. Dr. Jammine, thank you for joining us. How are you on this particular Wednesday?
I'm well, thank you, and greetings to you and your listeners.
Well, let's start with what the purpose of this mid-term budget statement actually is.
We never used to have it 30, 40 years ago. It was introduced in the late 1990s as a kind of a stopgap interim way of basically budgeting for the next 3 years. It doesn't include major tax changes, or no decisions on tax changes are included, but it does basically provide a stopgap between the annual budgets that are usually tabled in February, and it essentially sets out what the government expects the economy to do, in what growth rates, what inflation rates, how much government revenue it anticipates over the next 3 years, and how it's going to finance that.
Do you expect this budget to be about monetary policy as well in terms of the 3% inflation target?
There have been rumors to suggest that the Reserve Bank's or the preferred inflation target announced by the Reserve Bank in July, which was a downward revision from the midpoint of the previous inflation target of 3 to 6% down to 3%. There have been rumors suggesting that the National Treasury will officially suggest that the government intends reducing the inflation target to 3%. There's been a big debate as to whether or not this is justified. The Reserve Bank has been adamant that this will help to reduce the inflation rate from a medium to longer point of view, and through this help to result in lower interest rates than might otherwise have prevailed. But there have been a lot of opponents to this as well. The National Treasury itself came out with a statement back in August to suggest that it was not the prerogative of the Reserve Bank to decide what the inflation target would be, but that of the government itself. But since then, I believe there have been talks between the two, and there is a fair chance that the National Treasury might announce a downward revision of the inflation target in today's medium-term budget policy statement.
So South Africa also being removed from the grey list is a welcomed relief. What will this mean then for cost of debt, if at all, given that debt service costs are now one of the fastest growing items on the budget?
The benefits of removal from the grey list, I think, have already been manifested. The fact is that many people anticipated the removal from the grey list. We were actually it was brought to our attention about 4 months ago that South Africa had actually fulfilled all 22 requirements from the FATF to actually get off the grey list. And that, in turn, has actually been one of the factors contributing towards the rand's substantial appreciation over the course of this year, the anticipation of a removal from the grey list. So that in itself has already resulted in a diminution in government debt servicing costs, which have paved the way for the government to run a lower budget deficit than previously anticipated, and or use the money for that it would have been spending on paying interest to use it for other ends.
We understand we are heading for another budget surplus, and what does this mean? And are we on target in terms of revenue and taxation?
I think one must be careful in saying we're heading for another budget surplus. We're still running budget deficits. The surplus one is talking about is what is called the primary surplus. That is, what is the difference between revenue and expenditure after payment of interest. If you include interest payments on government debt, then we are still running a budget deficit. But nonetheless, what we are seeing is an overrun in government revenue compared with what was expected earlier in the year. The South African Revenue Services has improved its revenue-raising capability, has tightened up on its processes. Secondly, mineral prices have soared to all-time highs, especially the price of gold, but also we've seen significant increases in the prices of platinum and palladium and rhodium, and all that will bring additional tax revenue from the upward move in profits of those companies extracting those minerals. And although the combination of those factors should result in higher government revenue than previously anticipated.
Are you happy with the reforms government has been highlighting, particularly with the example of the Vulindlela program as it pertains to growth in the country?
The Vulindlela program is well focused and well directed at the right things that are needed for structural reforms, but they don't cover some of the other areas of structural reform that are required. In other words, what basically they are focused on improving electricity supply, improving logistics and their efficiency, especially at our ports and railways. Water supply is also being improved. And Vulindlela has more recently been focusing on trying to increase the competence of municipalities. But it still does leave a number of gaps that need to be addressed. The weak educational outcomes in the country, the high levels of crime, and especially criminal syndicates that are impairing the ability of the government to embark upon infrastructural investment programs. And it doesn't do much about trying to promote small business activity in an environment in where the business sector is dominated by big businesses and powerful governments and large trade unions.
As we talk of the business sector, do you have any concerns about the narrative of the U.S. about South Africa as it might dissuade investment into the country? They're not even sending any delegates to the G20 that we are hosting.
Yeah, they may not be sending any delegates to the G20, but I don't know that investment by the United States is the most important area of our economy. Our biggest investors and trading partners are Europe and China, and to some growing one with India as well. Those are the more relevant areas. Yes, of course, one is concerned about the impairment of relations between South Africa and the United States. But all I'm saying is that they are not the most important relations that we have with other countries.
So then the timing of this midterm budget, there is the G20 summit in the country that we're hosting, as we say, this month. How important is the timing of this address by Minister Enoch Godongwana with that backdrop in terms of the plans he puts forward for the country as the world watches and gathers?
I don't think that it's going to matter what the timing is in terms of its coinciding with the G20. The medium-term budget policy statement was always going to be presented around this time. The fact that it happens to coincide with the G20, I don't think G20 countries will be all that bothered about what is seen as an internal budgeting process here. I think we need to just go ahead with it as we normally do.
Your closing remarks, Doctor, as far as your expectations from Minister Godongwana?
I think he's going to make remarks to try and persuade people that the government is still very determined to embark upon fiscal discipline. And there have been suggestions that after what is expected to be a relatively upbeat medium-term budget policy statement, South Africa might receive an upgrade of its credit rating from 3 notches below investment grade to 2 notches below investment grade, and that would help the process of bringing down long-term interest rates still further, helping to generate a virtuous circle of lower debt servicing costs, smaller budget deficits, less of an increase in public debt, and a generally positive view from that point of view. But over and above that, it has to try and persuade the general public that the government is determined in its efforts to improve the growth rate of the economy.
Doctor, thank you so much for your analysis. We appreciate it.
Pleasure. Thanks. Bye.
Bye. That's Economist and Director at Econometrix Dr Azzar Jammine, as we look forward in South Africa to the Minister of Finance, Enoch Godongwana's midterm budget statement.
Parlez-vous couramment